All right. Good morning, everybody. Happy Thursday. Quickly check if we're live. I think we are. Yeah, we are. Okay, cool. Very good. Yeah, we'll get started in just a minute. As usual, a couple of minutes past the top of the hour. Give everyone a second to log in. And we're going to start with the bond market first today, and then we'll go into equities. We need to talk about yesterday. It's very important. So let's do all that here. Okay. Yeah, okay. All right, let's get started. Good morning, everybody. Serge Berger here from thesteadytrader.com. This is our Set the Market morning call. Going to spend the next 10 to 15 minutes going through the most important things on our notepad as far as the markets are concerned. Any questions, as always, please let us know. It's also Ticker Thursday, which means we take your tickers. So if you have any stocks, any ETFs, whatever you want to look at, let us know. We'll take a look. In fact, I need to make a note on that. Ticker Thursday is today. Okay. All right. So let's talk about a couple of things. First of all, I'm going to start off with the bond market. We need to understand what happened yesterday and why the stock market rallied. Then we are going to look at yesterday's rally to put that into context. And I want to talk about the VIX, and then we'll take tickers. So, first of all, let me get some feedback on this. How many people heard yesterday morning, right here, heard me say that we're very likely to have a good oversold bounce? Who heard me? Give us a little bit of, I want to hear that right now. I know most people didn't believe it, but there's a lot of stuff that we do over here that gives us these kind of clues. It's a process we have. It's not just random, that kind of thing. So let me hear it if anyone heard that. We then continued doing that over in trade ops. Now, also, just so you know, what we did yesterday morning, is I mentioned, I wrote to our inner circle clients, in which you really need to be part of, by the way. I started with this note. I wrote, the VIX still above 50 and uncertainty is still growing by the day. From our conversation with hedge funds this week, I make this very large, this week we are hearing more chat around a possible temporary pause on tariffs. So I wrote this yesterday early in the morning, right around the time that we had our call, actually a bit before. And so sent to clients, which, if would happen, could unleash a giant short-term oversold bounce. And that's what happened yesterday. Now, and then of course, this is this morning's note, so I followed up with clients on that. This is not meant to be a sort of a back-slapping, chest-pounding exercise of mine. What I'm trying to do is I'm trying to get people to understand that there is a ridiculous amount of opportunity in this market. Most people, from what we can tell, we have a good read on how most people are doing, are basically frozen right now. Because they've never seen an actual trading market, right? The buy the dip mentality is still strong. I just spoke with a broker this morning, actually, late yesterday evening, and he told me that the number one thing that he saw retail investors do last week is buy the dip. I'm going to tell you right now, as long as you guys, and I'm hoping you guys are not falling in this category, are still thinking Nvidia is down X% time to buy, as long as that continues, there will be no bottom to this market. This is different now, okay? Now, is there some chance that we just are off to the races? Of course, always a chance. But I think the chance is very small because things are now different. We're in a different part of the economic cycle. We have the trade war, which is very different. Companies' margins are collapsing. And I think we're already in a recession. So that's number one. Now, but actually, let me, while we're on this, let's quickly talk about what happened yesterday and what our reasoning was for all of this, and then I'll show you the trade that we actually did, which I said yesterday here that we would do in the Trade Ops channel. Join us in Trade Ops, please do. Reach out to Joel, support@stagetrader.com. You're not going to regret it. It's awesome. So what happened yesterday? Overnight, coming into yesterday morning, I told you here in the call yesterday morning, I had a couple of calls and the night before from people that the bond market was getting wonky. And it turns out that the rumors I heard and what I mentioned to you guys, I said this all yesterday morning, what I'm hearing from these people, the news told us this last night, right? That there's a big seller in the treasury market, and it was most likely the Japanese. They're the largest foreign owners of treasuries. And this is the 30-year yield of the treasury, right? So the 30-year treasury bond yield, okay? And what happened yesterday, if you look at this closely, this little point right here was getting threatened. Right there, that was yesterday morning. And so what that line is that you can draw here very clearly, it's 5%, okay? This morning we're trading just below 5% again, but that 5% line is an important line to understand. So the Fed doesn't, if they can prevent it, they don't really want, they've already kind of lost control of the long end. That's why they had to do what they did yesterday through the White House. And that's okay, right? That is, you have to do stuff. But this is the line in the sand. So when foreign creditors lose interest in the U.S. bond market, we have a problem. And the Fed the Treasury is aware of this. That's why Bessent wants to do what he wants to do. And quite frankly, I think the White House is aware of this, that they want to get a control of the bond market again. The Fed controls the front of the curve. The market controls everything else. And the market is very much in control of the long end. They don't want the yields in the long end to get out of control. So in a nutshell, that's why yesterday what happened in the market. And again, we heard this, we started hearing this, what was yesterday? Tuesday afternoon, Tuesday evening, had all those conversations, then early yesterday morning. So that's what happened. Now, this is where the process comes in, right? We have something called an extreme oversold and overbought indicator. It's called the Vertical X Pro, and I want to quickly share with you what that thing told us, and I keep losing this damn chart, so let me just quickly go back to this. I'm trying to share with you here. All right, so this is the Vertical X Pro. Everyone in here, if you want to be a trader or an investor, you need to have a tool or something that tells you when either a stock or an ETF or whatever you do is extremely oversold or overbought. And I don't mean a little bit, I mean extreme. Because at the margin, the big home run kind of trades happen there. The S&P 500 reached an extreme oversold reading last Friday. All right, that's this up arrow here. And since that reading, the S&P 500 is now up about 8-9%. Okay? What we did in Trade Ops, and again, that's why you guys need to be over there if you want to make money, or have a process at least. I have to be careful in how I phrase these things for compliance reasons. But what we did last Friday, I offered people an options credit spread. That's this thing right here. I posted it last Friday. I posted it again on Monday, on Tuesday, and yesterday we reminded people, and it's just a beautiful trade. So we put on basically a trade where we were protected. We would make money whether the S&P went sideways, right? Whether it just went sideways because it's obviously got oversold, or maybe even if it went down a little bit, or of course if it went up. Now, I didn't think it would rally 9% or 10% in one day, but it did, right? And so that's the point number one. The second thing we then did, and this is important, I'm trying to educate here in the process, right? The second thing we then did in Trade Ops is we set people up the whole day yesterday. I'm going to take you through the sequence here, all right? So this happened in real time yesterday in Trade Ops. This is just an app you can have on your phone, on your whatever you want, right? And we told people at 10 Eastern, there's a buy signal emerging, but it needs confirmation. It didn't get confirmation until I wrote at 1:05 Eastern time, that's New York time, that the SPY, the SPY ETF, needs to break above 502. Okay? And then I said the initial target is 510, and look what happened that was 1:05 p.m. 30 minutes later, the S&P went bananas, right? And we trailed it, and in one little trade that I had, just to show people, this was the profits there on that one, just with a little bit, tiny bit of futures. I have other accounts. I don't want to. Again, I don't want to be the one that's pounding chest here, but just to show people what's possible, right? Now, I'm not promising returns. I'm not giving you advice. I'm just telling you what we did in real time. This is all you can see. It's all time stamped, right? Now, specifically, the sequence of this stuff is this is a trader's market, right? So if you want to be a trader, and if you want to be an investor at the same time as well, by the way, you need to be involved in this market. So this is what happened yesterday, intraday. Again, we narrated it all in real time. We broke above 502. That was right there at 105. And then the Trump news came out. Essentially what happened, and this is important to understand, we're now getting to the what now going forward, right? Because I realize I'm kind of chest pounding, but I'm trying to give you this through the lens of education so that you can make money. This was a historic rally yesterday. What ended up happening as we got the confirmed signal when the SPY broke above 502, and again, this was all narrated in real time yesterday in trade ops. What ended up happening is the options call volume, which I was monitoring, spiked about 10 minutes before. So about 20 minutes after we got the confirmation signal, and about 10 minutes before the news. So clearly someone was told, right? Maybe not in an ill-spirited way, but it somehow leaked, let's put it this way, that this was going to happen. Trump news hits around 1:30-ish, whatever, maybe a few minutes before. I don't know, I can't tell by exactly, right? So that's saying. So now, Bruce, I'm trying to help you. If you don't like it, leave, please. I'm trying to help you what's going to happen now forward in my view, right? So that's the point. I'm trying to educate you to get this process right. So here is what we think is going to happen now going forward, right? So what we think is going to happen going forward is quite simply that we're going to get overbought, and we're likely going to retest the lows at some point going forward because we're going to have credit problems now. When you think about this as a company, when a company gets its margins squeezed, then you're going to get to a point where there's going to be credit problems, right? So that's the next step. Okay, so right now we're at a situation where we've had a really big move in the S&P. Again, we laid this out, and we now have to see where is this going to run out of steam. I don't know, because we have a very strong VIX here, by the way, and that's still kind of the point. The volatility has not subsided, right? The VIX, and by the way, the Vertical X Pro, which is our extreme overbought and oversold, is telling us that the VIX got that was another thing that I saw taking place. So just like the S&P was extremely oversold, right? The VIX got extremely overbought. So again, this is an extreme overbought, oversold reading. Not a little bit overbought, oversold, but extremely overbought, oversold, right? So that's where we are right now. But the VIX is still elevated. It's still in the 30s. I wouldn't be surprised if it goes back up again, but I don't think it's going to go back into like the low 20s anytime soon. We'll be open-minded to this, of course, but I don't think it will right now, given the uncertainty of news. So from a trading perspective, and also for people that are investing, let's talk about the trading part first. So we still think that the S&P could have more upside room, but it's probably the momentum, that momentum spike is probably slowing down now. So what are the levels? Again, VIX at 35, it has a wide range of outcomes, but I wouldn't be surprised if we see between 560 and 570 is potential upside. Now, again, keep in mind, we have a volatile market, so I would do all this with small size, but we do think that there's the potential for a little bit more upside, and I say a little bit given the volatility we have, 3, 4, 5% is actually a little bit, although that's a lot usually. So maybe kind of like into this area here, right? In fact, let me do it like this. All right, so there. That's kind of what we're thinking we could see. Um, Again, I don't know if it's 570, 560. We could overshoot for sure. But I think what you're going to see is you're going to start to see people come in and sell. And this is the big point. So from a very short-term trading perspective, what I'm looking for is if momentum sustains, right? So we're using our TST trender for momentum. But you have to now think about the rationale here, right? So if you are a big investor, or at home, right? But typically, the people at home are not going to sell until we make lower lows. So maybe let's talk about that first, and then we'll talk about what the rationale is for institutional investors. So most people at home, retail investors, are right now breathing a sigh of relief. Maybe you guys feel the same, right? And I've heard this already. I've had calls this morning and yesterday. Oh, great. Finally an update, right? But the retail investor now thinks everything's good again. The retail investor will not sell until we make lower lows. That, in my view, that's extremely highly likely to happen. Not today, not tomorrow, but maybe through the lens of a multiple months, multiple quarters. That's my view. We'll see if it's right or wrong, right? But that's kind of what we think is going to happen. Then retail will panic at some point down here. That's why I keep telling people you now have a chance. Again, I can't give you advice here. I can only give you education. But what I think we're going to see is right now an opportunity for a lot of retail investors to change their darn portfolios, rebalance it, take down your mega cap tech exposure. Again, not advice. If you want advice, you have to go over to bluemarlinadvisor.com. I can only give you education. That's why you have to go to trade ops. It's a great time, and you may have gotten a gift here. That's my view, right? Not advice. But most people are going to cash out somewhere down here. That's very simple. That's about 20-25% drawdowns. It's typically where people collapse, and then they never get back in, and then they. So that's why I keep saying I think a lot of retail investors are going to lose about a third to a half of their money over the this year, next year, whatever. That's kind of what I'm thinking. They're already down quite a bit. But that's kind of what I'm thinking. So what about institutional investors, though? They're not smarter. They just have to have a process because they're regulated and all that kind of stuff. They are going to be selling into this. I'm about as convinced as I can be. Again, there's always a chance I'm wrong, so please don't send me hate mails. We've gotten plenty of hate, physical mail even, over the years when we did something people didn't like, and then, of course, ended up being right. They didn't, and so that, it is what it is. But I think you are going to have a lot of institutional investors that are now going to sell up here. Maybe not like this right second here. Again, that's why I think maybe there's a bit more room to the upside, but they're going to lighten up on their portfolios. They're not going to sell every single share of NVIDIA they have, but they're going to further lighten out, right? Again, I'm not 100% right, of course. I'm lucky if I'm 60% of the time right, but I think this is the likely outcome from here. So that's what I think is going to happen. Again, keep in mind the VIX, and this is important, right? The VIX, which got extremely overbought. Look at the past 3 times our vertical X Pro indicator gave us extreme overbought ratings in the VIX. One time was in August of last year. These are the most recent ones. And then the S&P took off like a scolded monkey. And the VIX dropped from 65 back down to 14. It happened again in December. The VIX went from 27 back down to 14. Now it went from 60 down to 31. Maybe makes it into the mid 20s. We'll see, right? But that's again. Everyone needs to have an extreme overbought, oversold indicator, and I mean extreme. RSI is not going to do it for you. MACD is not going to do it for you. Like, you need something better than that. Use the Vertical X Pro. I highly suggest it. Come to Trade Ops, and we'll show you how we use that thing. Okay. Now, so that's the game plan that I have right now. I'm not going to short today. We have a bull put spread on the SPY that I showed you before that we put on last Friday in Trade Ops in real time. I'm probably going to close that one today or tomorrow. I have to see again. It's a very fluid and fast market, but that's my plan. and that's it. Now, from a credit risk perspective, that's the second wave, right? And I don't know if this is gonna. No, this is not a subprime mortgage thing. This is a very different problem right now. We'll go. The our set the market here is too short to go into that in a long way. But it's different, but it's credit risk, right? So the chart that I opened up the discussion with on Monday. It's BKLN, I think it is. What the hell am I doing? BKLN. I think that's the chart. BKLN. Yeah, bank loan. This one. So BKLN. If you guys were here on Monday, we started talking about this chart on Monday, and we talked about, and I should have this chart somewhere. And we talked about how this chart was likely going to be foretelling us that credit risk is getting worse. Okay, and basically the way I annotated it for everyone is to kind of show people that when we start breaking and losing these consolidation areas, which is kind of like this, and we just lost one, and this is a weekly long-term chart going back to the early 2000s. We're now rebounding and retesting, so the credit risk is getting worse. I'm a credit guy. I've always done that. I watch the credit markets very closely. I know I don't talk about that here much because most retail people don't give a shit about credit. You should, because it's the most important thing. But this is one thing I can tell you, and this is going to cause a problem. That's not going to make headlines today, but that will be a problem going forward. So that's kind of where we think we are. And now we get to Ticker Thursday. If anyone has any tickers you want to look at, I'm happy to spend a few minutes looking at any tickers. I'll just take quickly Apple off the top. I'm sure someone wants to look at Apple, so I'll take that out of your mouth. Remember, earnings season starts as well. So this is going to be important to watch earnings season. Earnings season starts tomorrow. My alma mater, JP Morgan, reports earnings tomorrow, or at least they should report earnings tomorrow. And so we are going to start going to earnings season now, which is going to be the next thing. CEOs are not going to have much good to say. They're not going to really know what to say. They're going to say, we don't know what to say because we have this tariff uncertainty. But as far as Apple is concerned, just so you know, there is a level here that has a lot of history right now. So this is a level with Apple that I would watch. Can we bounce a bit higher? Of course. But again, I think Apple investors are going to be at the margin lightening up on their exposure because they own so much of it. You have to think about it. If you are an investor, and you guys at home too, you probably own Apple many times over. In your IRA, in your retirement account, you've got a trading account, you own it everywhere, right? And so it's the same thing for a big institutional investor. They probably own it in all sorts of different ETFs and different strategies that they have, right? So that's probably what's going to happen going forward. Okay. CISRG. Hey, JB. You know this. Good one. Yeah. I appreciate it, JB. JB's pointing out a good one. Intuitive Surgical. And he, great. Thanks. Appreciate it, man. I'm going to put this into trade ops as well. So this is beautiful. This is the 150 period moving average. A lot of memory. The 150 period moving average works very well. And this is ISRG. In fact, JB, can you put that at the trade ops? That's an awesome chart. Maybe you already did. A lot of potential resistance here. That's great stuff. Great stuff. Next one, CTAS. Yeah, so CTAS, it's kind of a similar situation, right? You got some overhead resistance. The point is with these kind of stocks, and then this is kind of this is a big deal. You have basically a trading range. So from a trading perspective, even from an investment perspective, I don't see any reason to get involved with a name like this here. It's just in a trading range. It's a wide trading range. It's from 180 up to 208 or something, or 210, but it's a trading range. So I don't know what to do with something like this. It's just way too choppy. And then Bob wants to look at RTX. Yeah, I mean, obviously a lot of this stuff all looks the same, right? So this I'm just doing technical stuff here, but I would argue that all these kind of names, again, look, this stock has traded between 113 and 136. You know, here too, you could make it a pretty clear trading range. It's just stuck in a range. You know, if you own too much of it, maybe lighten up. Not a recommendation, just education here. But I don't. There's no reason to buy it. It's not breaking out of anything. There's a lot of price. I guarantee you there's a lot of people that bought the stock up here when our favorites on CNBC told everyone to buy this kind of stuff. And then the stock took a dump, excuse my language, to the tune of 17, 18%. Everyone's now scared, so it's a gift. So this is the other thing, right? So whether a lot of people who are watching the market and not just letting things kind of fall as it may, are who got scared over the past few weeks, are going to take this opportunity to say, you know what? Oh, my loss is much less than it was yesterday. You know, a big move. Let me get out, right? So some people will start to think like that, and then you have the institutional selling. Most retail investors are not going to get out until the market's down 25%, and their portfolio, and they've lost 30-40% of their net worth. So anyway, guys, I got to go. See you over in Trade Ops, where I think we're going to have another great trading day. And we'll be back here with Set the Market on Monday. So I'll see you guys back on Monday. Don't do the show on Fridays because, God willing, I need to give my voice a rest a little bit every once in a while. But hopefully it's helpful. And we'll see you guys over in Trade Ops in a minute. If you don't have the link for Trade Ops, just make sure you email support at thesteadytrader.com. And we'll see you guys over there. Thanks. Hope it was helpful. See you guys there.